It's about that time of day again. My name is Joseph. Monday evening, December 10th. Welcome back to your nightly newsletter. You know, I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan tonight is to identify the best locations to look for entry patterns tomorrow morning in my trade room. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. You know, crude is bearish, been trading the low of a range this evening. But with such a strong momentum push to the downside, I would definitely expect another leg lower. And I'm using the high of a hidden channel to find the proper entry tomorrow morning. The S&P is bullish, but with price finishing at a key resistance level tonight, I'm waiting for a more reliable buying opportunity, waiting for a deep pullback off the high. Nasdaq is also bullish, but trading at the high of a trading range. That tells me I should be able to get another leg higher while keep my options open for a possible big collapse back into that range later in tomorrow morning's session. Gold is bearish with a 1, 2, 3 reversal pattern. So I've located the hidden channel and I'm waiting for the entry pattern up overhead. And of course, we can't forget about the euro. The euro's bearish with a wide channel coming lower. So I've added the midline to that channel, and I'm looking to use that midline to finish off a pendulum swing all the way back to the big round number on the euro. Boy, oh boy, I got a great newsletter in store for you guys and gals here this evening. We're back after the weekend away. We get the second week of December. We get some big news coming later on this week. And as always, I got a great plan of attack for you guys on tonight's nightly newsletter video. But before we get to the charts tonight, I need to remind you, please make sure you never miss a video by joining our mailing list. You can find that opt-in form right on the homepage here at Sideways Markets, and I'll shoot you an email every time our nightly newsletter goes live. Also, too, if you're not joining me tomorrow in the trade room, the next best option is to download all the charts. You can download all the charts from tonight's video. You'll find a big button right below this video tonight on our blog that'll give you the option to download all those charts. If you're not with me tomorrow in the trade room, that's the next best option. And don't forget, if you have any questions about anything covered in this video tonight, please remember you can post those questions in the comment section below, or you can always use that live support tool or pick up the phone and call that toll-free number anytime you need any help along the way. And if you like what you see, please don't forget to support this channel by subscribing, and when you do, hit that bell icon so you get notified every time I post something new. As always, it is great to be here with you guys and gals once again this evening. Hope you guys enjoyed your weekend, but let's not waste any more valuable time. Get ready for tomorrow's trading session. Let's take a look at tomorrow's economic schedule. That way we know what's on our radar for Tuesday morning. Tuesday morning, December the 11th, we only have some light news tomorrow. We got the PPI number at 8:30 Eastern Time. We do have the labor market survey out of Great Britain. I don't expect it to be too big of a market-moving event. All eyes will likely be on inflation tomorrow in the U.S. at 8:30 Eastern Time. The Producer Price Index, the PPI number, published at 8:30 Eastern Time tomorrow. Whenever I think about PPI, of course, being inflation, PPI, CPI, right, any of these consumer prices or producer price or numbers, anytime I see inflation numbers like this, I always think about currencies and I think about gold. So definitely keeping an eye on currencies and gold tomorrow morning early in the session around 8:30. And you'll notice most of the news this week is going to be around this 8:30 time slot. 8:30 tomorrow, 8:30 on Wednesday. Thursday is that highly anticipated ECB announcement they talked about today about raising rates. This is probably the biggest news of the week is going to be that ECB announcement on Thursday. And then, of course, it's all right. It all shifts to Friday morning. We got a bunch of news out of China in the overnight, and most of it still piled on there around 8:30 for that retail sales number and industrial production number around 8:30 Eastern Time on Friday. So set your clock for 8:30 Eastern Time this week. There's a lot going on around that 8 o'clock hour here this week. Tomorrow, of course, we get that PPI number at 8:30 Eastern Time. That'll be the big news here for tomorrow. And again, we'll keep watching, right, as we see more headlines ahead of that ECB announcement on Thursday. So get at it tomorrow early. Don't forget, we'll have a front row seat tomorrow for that PPI number. Our trade room opens up every morning at 8 o'clock Eastern Time with all of our advanced members. Hope to see you there right along with me tomorrow morning. Speaking of tomorrow morning, let's get these charts ready for tomorrow. My goal tonight is to get this plan put together for us for tomorrow morning's trading session. And of course, we'll open up tomorrow at 8 o'clock Eastern time. Starting off tonight, how about some oil? Starting off with oil tonight. Oil is bearish with a trading range, a spike in channel, and a hidden channel, along with a measured move on the chart this evening. The momentum is definitely bearish. It's pretty easy to see this is a bear market, which means anytime I see bearish momentum like this, I always know to go looking for levels of resistance overhead that I can then use to combine with entry patterns to sell at resistance tomorrow morning. Also important, recognize where we are right now. If I zoom out on this chart a bit, it's not that difficult to see that we are really rattling around inside of a big range right now, from this 54 half down to this 50 half area. This range has started to settle in here ever since middle of November. So it's pretty easy to see here we're rotating up, rotating down, rotating up, and rotating down. Now it's worth comparing these last two big legs lower. You know, as a rookie, I was always very worried about selling into the low of a range. But this isn't just your normal trading range. You'll notice this range is very wide. Now, we talk about this wide ranges, wide channels quite a bit. And the most important thing that you want to think about when it comes to a wide range is momentum. In other words, when a range is really narrow, it's not very easy for the buyers or sellers to get any good momentum brewing. But when that range is really wide like this, when we come off the top of that range down to the low of that range, that is a whole hell of a lot of momentum, and it oftentimes can't stop, and it will give you another leg lower. The key is when you see a wide range or a wide channel, you know that's going to allow for a lot of momentum. So again, we're trading this slice of the chart right now, but it always helps to look left and see what happened in the past. We saw a very good example of that, right, just a few days ago. Strong move down to the low of the range. The range was there at that point too, and what happened? It gave us one more leg lower, right? So strong move down, expect one more leg lower, and that's pretty much what we're looking for right here on crude. History loves to repeat itself, and you can definitely see how, again, whenever we have a nice strong momentum push in one direction, we usually get a follow-up leg. Now, that follow-up leg may not be a tremendously large follow-up leg, but it will usually at the very least retest that low, right? So strong momentum move down, up to allow sellers to sell high, and then of course, right, collapsing back down to retest that low. That's definitely something I'm keeping an eye out here for tomorrow. Strong move down, yeah, we're at the low of this range, but that momentum is so strong right now, I would expect to get at least another leg lower. Now, an easy way to measure this is to measure this first leg down. Then, however we pop higher here, I can then use that as my calculation as far as just how far, right, that next leg may go. So keep that in mind as we look for those targets, right, as we go lower. I don't want to sell into the low. I want to sell up at resistance, right? But at the same time, though, I should be able to, if I can incorporate, right, a level of resistance with this, I should be able to get, at the very least, a retest of that low. So again, up and then a retest of that low with the potential of using that move right there as the big objective for that runner target on the sells. So the momentum tells me I should be okay to sell at least another leg lower, but I need to wait for a pullback off these lows as we go. So we're bearish. I'm looking for levels of resistance. I've got a level here, not a very useful level of resistance there. I'm really looking at the low of this trend line marked up with these highs. I really love it whenever I see a hidden channel like this. You'll notice I'm drawing the trend line off the low here, and then I'm bringing it up, and you can see how well it fits there up around those two highs. So it's a real easy clue there. Pop that midline on, and you can see that midline really starts to fit like a glove, right, as we go forward. So that's definitely my meat and potatoes here for tomorrow. This is definitely where I want to look for that sell, right, as a key level of resistance. Combine that with some prior swings, a key reversal line, and this area becomes a very attractive area, resistance area, to look for selling opportunities in a bear market. So now we know where we're looking for the entry. Now what type of entry pattern are we going to use? Remember, I'm not just going to blindly sell resistance in a bear market, right? It doesn't work that way. It's not exactly that easy to trade. So what I'll do is I want to wait for price to get up into resistance and then look for a proper entry pattern. And the entry patterns are really for the purpose of giving me a short-term edge to take a quick profit target, remove the risk, right? And then hold that runner for a nice big target. So for example, there are a lot of different entry patterns that I use here every day in our trade room. One of them is what I call a two-legged pullback. Now, two-legged pullbacks are very distinct. They'll have one obvious leg, they'll have a second obvious leg, and I'll draw a trend line in between those two. Then what I'll do is I'll use that trend line as resistance instead of support to sell right up, basically up around the high of that channel. Again, I call it a two-legged pullback pattern because it's a one, it's a two, it creates that trend line, then I'll wait for that trend line and sell it right down from there. Again, that will allow me now to kind of fool those buyers into thinking the market's going higher, give me a short-term edge over the opposite side of the market. I'll take a quick first target, remove the risk, and then hold that runner again with a big runner, right? Seeing how much we can get out of it tomorrow morning. Now, what else will we get? Maybe we don't get the two-legged pullback. Maybe we see a more of a sharp pullback here. If we get a real sharp pullback, it's a couple options to use. One would be a two-try failure, a buyer failure. In other words, if we just punch higher here, that's going to give the buyers probably a pretty good reason to try to buy a pullback. The problem is the overall momentum is too bearish on this chart. So if we do see a relatively strong move higher here, I would expect buyers are going to unreliably try to buy the pullback and get a 1, 2, 3 reversal. I'm going to play that right against them. Once I see them try to buy that pullback, now I know where their stops are and I can sell right into those stops. We call this one a 1, 2 try failure pattern. Okay, we talk about a two-legged pullback. This one's called a two-try failure. Those numbers 2 is very common in these patterns. Now, once we get that buyer failure, right, running back lower, I don't want to sell low. I don't want to get in the habit of chasing after this market. So now what I'll do is we'll connect those two lows, bring it up to that high, right, and that will create what we call a hidden channel. The next pattern I'll look for is that hidden channel pullback pattern. You'll notice how I draw this, right, coming off the moving average, coming off the channel, coming off of that prior swing that we saw right there, right, in between those two, right, tries to go higher. So there are 2 easy patterns there for us. It's a 1, 2 failure into a hidden channel pullback. 2 very, very simple patterns that we use every day, right, in our trade room. Now, another thing you want to be aware of is what if we go sideways here? What if we don't get that nice deep pullback, right? What if we don't get the pullback? What if it just sits here and goes sideways? Now what do? Well, if we sit and go sideways, this will be a bear market into a trading range. The bear bias tells me to sell above the top of the range, right? The trading range tells me to use the 2-try failure pattern. And oftentimes in these environments at the low of a major range, it'll be a relatively strong move higher. If we do get that strong move higher, then what I'll look for is what I call the nested 2-try, which is the 1, which is the 2, and then we'll sell into those stops. Let those buyers try once, let those buyers try twice. Once I have the nested 2-try, then I'll start looking for that sell as it collapses back down into that trading range. And last but not least, what if we keep going lower here? If we keep going lower, right? If we keep going lower, we keep grinding lower, this could be a spike in channel. In fact, I'm sure most people would probably look at this as a spike in channel, right? It's a really narrow channel. I like to use hidden channels, which is why I took the low of this channel and then kind of superimpose it up top there, and I want to use that as a key level of resistance. In my experience, that's a lot more reliable than just finding a channel and hoping for the best. But again, this could be a spike and channel pattern here, right? You can easily see it's rotating inside this real narrow channel. So if we keep going lower on this, guys, right, no harm done there. All I want to do now is still try to use that channel as we go. So the patterns are pretty much the same thing. We'll go up, it's that two-try failure into hidden channel pullback, or maybe it's the two-legged pullback pattern, right? Or maybe, of course, right, we get that trading range into that two-try and that nested two-try failure pattern. Oh, and one more thing. I'm going to keep moving through this newsletter tonight, but if you want to learn more about all of these two-legged pullbacks, two-try failure patterns, nested two tries, trading ranges, and everything we've talked about so far, I'd love to give you a much deeper dive into these topics and really give you all the details you need to be successful with this, even if you're not with me every day in my trade room. And to do that, I'm going to drop a free trading course in the upper right-hand corner. If you're brand new here, or maybe this is the first time you think you want to learn more about this, you can learn a much deeper dive into this entire strategy, learn all my favorite entry patterns, all the technical analysis tools we use. I'll even send you hundreds of examples of real patterns that we see every day in our trade room. In the upper right-hand corner, grab that free trading course or click that big red button right below the video tonight on our blog here at Sideways Markets. Grab that access to the free trading class. It'll give you access to our members section here at schooloftrade.com, and you can learn all the details right as part of that free trading class. Now, last but not least, how do we turn bullish? How does a bear market turn bullish? Very carefully. It doesn't do it by itself. It's got to have help from the sellers on this. We talked about this last Friday or last Thursday evening on our last nightly newsletter, and that was, how does a market reverse directions? We need three things, and we call this a 1, 2, 3 reversal. You'll see a couple examples of those right as we get later on in this video tonight. But the 1, 2, 3 reversal. Step 1, a strong counter trend move. Step 2, a pullback to the moving average. And step 3, no, don't buy the moving average, because remember, if they buy it, I'll be waiting there to look and see if it fails. I'm going to sell right into their failure right there. You don't want to buy those pullbacks because they're not reliable enough. Wait for the explosiveness off of that moving average. What this will tell you is the sellers are walking away. Okay, up until that point right here, you're guessing. That's a complete guess at that point. Momentum is way too bearish to be a buyer. And yeah, you can make up whatever story you want about having some magic indicator, or you can predict it. But the reality is, if you're trying to predict reversals, you're on the wrong side of the market. You're on the wrong side of the probability. You're on the wrong side of the odds. And although, yes, you can predict reversals, the reliability of it is really about 25-30%, which means most traders will have a very hard time making consistent profit over a long period of time using a strategy like that. I prefer to wait for the market to reverse with a 1, 2, 3 reversal. Then what I'll do is I'll mark up that high, I'll mark up that high, I'll find that channel, and now my sweet spot is that overlap between these two right there, right? So that's my sweet spot now. I want to find that entry pattern coming off the low of that channel. And if we can get that, then it's pretty obvious, right? We're going to go back to that 53.84 area. That's the top of that big range high. So relatively easy job here right now. I want to get up off this low so I can sell it back down. I talked about the different entry patterns we're looking for. If it keeps going lower, stay patient and wait and sell high. And as always, stay patient, wait for that 1, 2, 3 reversal, and then we'll find that new channel, right, and buy the way back up to retest that high. Oil looks great here, setting up for tomorrow. Looking forward to seeing what tomorrow brings. How about some S&P? The S&P is bullish with a channel and a measured move in the chart this evening. The bulls have momentum, which tells me to focus on buying support levels below the channel tomorrow morning. I'm also keeping my eye on a possible range top here because it's easy to see this short covering rally finish right back at the top of today's trading session. So it definitely looks like the bulls have control. This is obviously a bull market right now, but I know what you're thinking. We're at the top of the range. We may end up collapsing right back down again. The problem is we don't really have much of a range to work with, right? There really isn't anything here that would tell me this is a range-bound market. Besides the fact that we have that double bottom here, that's the only real sign that maybe, right, maybe this ends up being a range here tomorrow. But for the most part right now, though, we have just speculation on this right now. And of course, I'm sure most of you are saying, what are you talking about, Joe? Why would you try to buy this market right now? Look at the strength of the overall bear trend. And you're absolutely right. I'm definitely not going to argue with you on the topic of that. The long-term trend is bearish right now. But my job as a trader is to find out what is the short-term market's momentum. And right now, I cannot call this a bear market. Yes, if you look long-term, you might call it a bear market. But I'm not a long-term trader. I'm a short-term trader. And when it comes to short-term trading, I want to care about who has control of this momentum right now. And you can see here the bulls clearly have control of momentum in the short term. So I want to be a buyer. Anytime I see a strong move in one direction, I always know the odds are pretty good. We're going to pull back and at least a retest of the high. It's the exact same principle we talked about with oil, right? Oil's bearish. We should see that additional leg lower. Then we can look for the move back up on oil. Same thing here, right? Pending any overnight disasters, we should see buyers waiting for a pullback, trying to buy the pullback and retest that high. Now you'll notice with the bulls in control, I've got this very nicely behaving channel right now. Beautiful channel rotating back and forth as we go. Anytime I see a real well-behaved channel like that, I always know the odds are really good. We get that two-legged pullback and a retest of that high. So momentum is on our side. The channel's on our side. Really all we need right now is to get a pullback to support. And of course, I will keep my eyes open on a possible reversal. We know what a reversal looks like. It's a 1, 2, 3 reversal if it does want to turn into a trading range. So let's play this game. What if price goes up? What if price goes down? What if price goes sideways? What's the plan here? Now, as the market comes lower, give me 1 second here. Get that off there. As we pull back here right now, as we pull back, this is definitely setting up here for a two-legged pullback. I'm going to draw that trend line off the high. This is now setting up here now for a two-legged pullback, and I'll try to use that trend line as a support level here for tomorrow morning. So keep your eyes open on a two-legged pullback pattern using that trend line for that buy going back up to retest the high. Now, again, as I talked about on oil, I can use the first leg higher here and use that as my projection, right? Size of that leg, almost like an Elliott wave, 1, 2, 3, 4, 5 wave pattern. I'm not much of an Elliott wave fan myself, but I do use pieces of his theory, right, in my own trading strategy, and that is definitely one of them. When I see one leg that is substantially larger than the next, usually that tells me this is wave 3, obviously, 1, 2, and then of course next one will be similar to that one right there. So that's my target there as we go higher. Another option would be we collapse back down here. As we collapse back down, we look for that seller failure, right? That 1, that 2. Let those bears try once, right? Let them try twice. Once they try twice, now we know where the stops are. We can buy into those stops. Don't forget, that sets up also for that hidden channel pullback pattern, right? That sets up for that hidden channel pullback pattern, right? That hidden channel pullback pattern coming off that low. So 2 try failure, right, into that hidden channel pullback. Okay, almost identical to what we looked for on oil, just in the opposite direction. Another thing I want to watch for tomorrow is what if we go sideways here? This could easily turn sideways where we start seeing double tops and double bottoms, right? Whenever I see a real tight range to the top of that bull market, I'm always looking for that nice deep pullback, and then let those sellers try to sell into it. Let them try once, let them try twice. This creates what we call a nested 2 try. We got 1 try for the bears going lower. Let them try once. Let them try twice. Once we get that second try, then we can buy right into those stops for that move going back up to retest the high. So it's a relatively easy plan here. Another thing I'm watching here, we have flag pattern. Keep your eyes open for a flag. You can almost see it developing here, right? A flag pattern is a bull pattern with a bear channel. Okay, it's not a reversal because it won't collapse. It will grind lower inside this channel. Same thing. I want to buy using that trend line overhead, right? That's my signal off the trend line overhead. There'd be a flag pattern, right, as we pull back. So now we've really addressed all the potentials here if the market, right, pulls back. If for some reason it keeps going higher here, what's our plan? We'll keep on waiting as it goes higher for that deep pullback using any of the patterns that we discussed tonight. Two-legged pullback, right? Your two-try failures, your nested two tries, right, et cetera, et cetera. And again, I'm going over these entry patterns relatively quickly here tonight because I'm getting us ready for tomorrow morning. But if you want to learn more about all the entry patterns, grab that information icon. It's just in the upper right-hand corner there, or the button below the video tonight on our blog, and just get registered as a brand new client for our free trading course. That we can learn all the details of the strategy right before becoming a full-fledged client. And that way you'll know exactly what to expect every day in our trade room. Now, again, as I mentioned earlier, I'm definitely going to keep my eyes open on this for a reversal because, I mean, let's be honest, the overall trend is bearish. So what does a bear reversal look like? Reversal looks like this, right? Strong move down, pull back to the moving average, and then strong move off, right? Now, I know what you're thinking. Can't we find some way to sell into this as we go lower? Well, the problem is it's difficult to pick, it's difficult to pick the entry time. You know, take this one for example. At what point do you start selling that? You know what I mean? It's always easy in hindsight, but at what point, right, do you start selling that? That's not a bear market yet until we fall off that trend line, right? To fall off that moving average. So it's very difficult. You know, this is just an example I see by looking left here. As we go lower, at what point do you sell? And then where's your stop going to be? Is your stop all the way back up here? I mean, what are you trading with, $1 million account? That's a big risk. It's a big, I mean, obviously it's worth the risk, but for most traders, right, a 10-point S&P stop isn't exactly going to be reasonable. So that's the hard part, right? Yeah, it's all great in theory. Sure, you can sell as the market's going lower as long as you're tolerant of quite a bit of pain. So rather than trying to sell as the market's going lower, knowing that there are buyers down here and those buyers are probably going to come in and try to buy it up, I'd rather wait now to get that collapse off that moving average. Then it's a whole lot more reliable. That's the key. You know, we always talk about trading reliability for profitability. I'd much rather skip that pullback, even though I realize in hindsight you can always see which ones work. But in real time, though, it's really difficult to take that trade short when the overall market is bullish. So what I'll do is I'll wait for it to collapse. I'll find my new channel. I know where my sweet spot now is, and now all I'm going to do is just wait for that price to pull back here, right, and sell it from there. So yeah, I'm not going to get as many trades this way, but I'll get a lot more reliable trades. And when you're a new trader, it's all about reliability because rule number one, don't lose money. And it's really easy to lose money, right? Well, yeah, it is. Rule number one. Rule number one is not make money. Rule number one is don't lose money. Rule number two is don't lose money. And rule number three is refer back to rules 1 and 2. Don't lose money, which means we are trying to increase our probabilities, right? Increase our probabilities as much as we can. Because if I'm just trying to make a buck, if I'm just trading on instincts, then I'm going to be, yeah, you'll get lucky every once in a while, but it's difficult to get lucky every day in the financial markets. Same thing happens in Vegas, right, or Atlantic City or any other, casino. Yeah, you might get lucky once, right, but good luck sitting there and being lucky every day or every time, right, you pull the wheel. So again, now we know what we're looking for with the reversal. Once we get the reversal, then we can pull the trigger, right, and we can sell it going back down to that low. Because there's plenty of profit potential here. 1, 2, 3. There's plenty of profit potential here if we can get, right, that reversal. Okay, so keep your eyes open for the reversal. At the same time, look at the buy, and again, with all this momentum, we should be able to get one more leg, right, to go higher. And the size of that leg will typically be, right, about the size of that first leg. Just kind of keep that in the back of your mind here as we're waiting. And of course, tomorrow morning, 8 o'clock Eastern time, we'll trade the strategy together. Next up here, how about some Nasdaq here tonight? Nasdaq is bullish, but a trading range here on the chart tonight. We got a bull market, got a range, got a channel, and of course a measured move on the chart. The bull momentum tells me to focus on buying at support levels with a deep pullback off the high. The trading range, however, though, reminds me that I can't get greedy on this next target with my focus basically on a small scalp opportunity going higher before we anticipate a much bigger move back down into that range tomorrow. And again, I'll do both sides of this just like I did on the S&P, right? It is obvious that the overall trend is bearish on this right now. So trying to be a buyer on this, like I said, you really can't be greedy on this. All we know is we definitely have momentum that is higher here, and I'll look for that scalp going back up to basically retest that high. What I'd like to do is finish off this pendulum swing. I've got the trading range, you can see. I mark up the range expansions below. I mark up the range expansions above, right? And you'll notice the size of this pendulum swing, we haven't quite reached that pendulum swing yet, up around that 24.5 area. And I'll tell you, I've been doing this for a long time, and I'm always incredibly surprised at how reliable those pendulum swings are. Now, again, we're long-term bearish. This may not last through the overnight session, this bull trend, but I'll definitely be keeping my eyes open, though, for a chance to buy it, if not for a little tiny scalp going back higher before we go looking for that move back down into the range tomorrow. So think of this now as major resistance over here. Nice strong bull momentum going higher, right? I'm marking up the high of that range. I want to find levels of support. I don't think the low of this channel is going to be enough space here for me, so I'll probably see a deeper pullback than that, right? When you've got resistance here overhead, that'll usually produce a deeper pullback before you get buyers interested, because buyers just simply aren't going to want, right, to buy into that level of resistance. So I'm looking left, I'm finding the top of that range. That's a key level of resistance. I'm marking up, key level of support, I should say, marking up that prior swing, marking up that prior swing. Relatively easy there. Again, as I mentioned on the S&P, the first leg will usually be the target for that second leg. I've got my eyes, though, here on that 24.5 area, right, my pendulum swing. So what are some options here, right, as we go lower? Well, you can almost already see that trend line, right, coming down. And maybe it's a flag pattern, maybe it's not. It's a bull market pulling back with a bear channel. What's the plan? Up, back, and go. Buying off the top, right, of that flag pattern. Don't let a bear channel make you assume the market has to be bearish. We see lots of times where bear channels are just pullbacks in a bull trend. You know what qualifies a bear trend, right? The 1, 2, 3 reversal. So as we come lower here, that's one option now, is buying that pullback above the top of that channel. Another option may be a trading range here, right? If we do see the market going sideways here up the highs, right, keep your eyes open for that deep pullback, that nested 1, 2, and then up we go. This is almost identical to what we talked about on the Emini S&P. The only real difference is the Nasdaq is definitely a range, whereas the S&P is still waiting to confirm that range. It's a big difference there, because when there is a range, we automatically know there are going to be sellers up here trying to sell off that high, which means we need to make sure we get nice and low, so we're buying with enough room to kind of put some meat on the bone there to make it worth our time, right, to buy that low. My big concern with the Nasdaq is that falling resistance, because as we go lower here, right, as we go lower here, that falling resistance is going to make our job more difficult. So for example, a 1, 2, this now sets up not for a buy. I don't want to buy into that resistance. This now sets up for a trap, and probably one of the more aggressive but valid opportunities here for a short tomorrow morning. If we do see that trend line coming over, and we get those, right, and we get that one, this would normally be a buy here, right? On the S&P, it's a buy. On the Nasdaq, though, it's a little bit different, because we can easily see that trend line coming down overhead. If we get those bears trying once, trying twice, you're going to see those buyers. Those buyers are going to try to buy that failure, right? Watch them struggle to that trend line. And once they struggle the trend line, then we know the writing's on the wall. That's your reversal right there. That will be a little more aggressive option, but I'll definitely be watching that tomorrow if we can get set up for that falling resistance, that deep pullback. Again, you can see how I draw it out here right now. Let them try once, let them try twice. At that point, look to combine that little slice there between the trend line, right, and the high of that 2 try. That's a great looking trap high there, a great spot there to pick a top and back down right into that trading range. Now don't forget though, if we push through it, right, if we push through it, we can use that trend line now as support. So kind of keep your eyes open on that. Don't just be blinded by one side or the other. We're still very much bullish right now, right, in the short term. And again, how do we turn bearish? Strength move lower, pull back to the moving average. You got it. You got it. Strong move down. Got it. We'll mark up that low. That's a 1, 2, 3 reversal. Find that low. Find that high. And now we know where to sell, right, as we collapse back down again. So relatively easy plan there on the Nasdaq. The one big thing right now is wait for those bears to get that little bit momentum shift before we start looking for those sells, because in all reality, when we have a strong move in one direction, we almost always see a second leg. Don't forget tomorrow morning, 8 o'clock Eastern time. We're going to trade this strategy together tomorrow morning in our trade room. So make sure you join me there, 8 o'clock Eastern time tomorrow. How about some gold right now? Gold is in a very similar situation. We have long-term trends that are conflicting with short-term trends. Gold is bearish with a clear 1, 2, 3 reversal, right? It's very easy to see, right, bulls into a 1, 2, 3 reversal. Mark up that low, mark up that high, and we're selling as we go back down. The bottom line is we know we're bearish, got a 1, 2, 3 reversal, spike and channel pattern on the chart, resistance trend line coming down overhead as well. Again, the 1, 2, 3 reversal, 1, 2, 3, right? Mark up those lows, up to that high. That gives me a key level of resistance. Combine that now with a falling resistance trend line, and that really gives us this sweet spot. We know we're bearish right now. Again, you're more than welcome to argue with me because I know it's easy to see there's a long-term bull trend here. If you were to look left here, right, there's definitely a long-term bull trend. And yeah, of course, there are options for, well, couldn't you call this, right, a bull channel? And aren't we coming off the low of that bull channel? We are. The problem is, though, is that we're not bullish right now. We are short-term bearish, which means, and I've learned this lesson over the years, I never trust long-term channels, not as a day trader. Again, if you want to be a swing trader, then be a swing trader. But if you want to be a day trader, right, focus on what's happening today and at the very most, maybe tomorrow, right? What is the short-term momentum right now? You cannot look at this market right now. You can't look at this chart and call this a bull market, right? We're what, about 70% pullback off that last bull swing. So again, you can't call this market under normal conditions will have a very hard time testing that high. It will. It's pulled back. It's pulled back too far. At this point now, sellers are coming in trying to sell up around those highs. So be very, very careful trying to buy this, even though we're a long-term bull trend, right? Remember, rule number 1, don't lose money. How do we make sure we don't lose money? We go with the short-term momentum in the market. And you're more than welcome to always wait for when the short-term momentum is aligned with the long-term momentum. You're not going to take that many trades doing it that way. I don't think you need to do it that way because we see a lot of times where the long-term trend is bullish, but then we have 2, 3 down days in a row. So again, rule number 1, don't lose money. And to not lose money, I always want to make sure I go with the momentum in the market. This, of course, is a bear momentum. With that bear momentum, I'm looking to sell at resistance. I've got resistance levels coming over, right? That's a trend line coming down. What I always do, though, is once I see those reversals, though, mark up those lows, bring it up to that high, right, either up there or up here, and look to get short off of that area there. Those are the areas looking for. And then, of course, my target for the sell side, we got 1 leg, we've got 2 leg. I got a measured move at 44.8. That'll be a great target for us. But in all reality, got my eyes on that 41.5 area for the runner tomorrow, right? If we can get this thing to collapse back down as we go. So digging in closer here right now, a lot of these patterns are going to be repetitive. We talked about earlier. Bottom line is I want to get up around resistance as we go up into resistance, I'm expecting that buyers, much like we saw back here, are going to think this market is bullish, and they're going to want to buy that pullback, right? That will give us the one try, that'll give us the two try, same thing we saw earlier on in the session, right? It'll give us a two try failure pattern, and we can sell right into those stop losses. Then from there, obviously, once we see those buyers successfully fail, then we can look at the hidden channel pullback pattern and sell off the top of that channel, right? That will also be an option for us as well, right? So anytime we see this market turn bearish, we go up, one try, two try, failure. That's the exact same type of pattern looking for tomorrow. Up, one try, two try, failure. I don't like to sell too low on this chart, so I want to mark up that low, mark up that hidden channel, and I'll sell off the top, right, of that hidden channel. So two easy patterns there if we can get the market, right, going higher. If we keep going lower here, not much changes. I'm going to still keep my eyes on those prior swings. I'm going to still use this hidden channel. I'm going to still look for that 1-2 failure back down again. I'm expecting there are going to be a lot of buyers who want to buy this market, and I'll use patterns such as the 1-2 try failure to rope them in and pick their pockets as we finish up this measured move here for tomorrow. Last but not least, how do we turn bullish? What would a bull market look like? Won't take that much, I would imagine. 1, 2, 1, 2, 3, reversal. 1, strong move up. 2, pull back to the moving average. 3, strong move off the moving average. Mark the high, mark the new channel. You got it. And now we know where we're trying to buy here, right, on that pullback. The target going back up to retest that high. Pretty easy plan there on the gold. All we need right now is to see, do we go lower? If we go lower, stay patient to sell high. If we go higher, look for those buyer failures and sell that sucker back down to retest those lows. Now, last but not least here, over on the euro. The euro's bearish with a strong spike lower, a trading range, and a hidden channel on the chart this evening. The trading range is the big clue, and it's easy to see price rotating now from the high up around 14,000 or almost 15,000, right? Potentially now down to the low of that 13,000 and change, right? Easy to see price rotating from high of that range down to the low of that range. And of course, as I mentioned before, I can take the amount above the range, project it down below the range, and look what that creates. That creates that pendulum swing. The middle of the range, we swing up, we swing down. I've got my eyes on that 13,300 at the low of the range. But if I have my way tomorrow, we'll hold that runner down to that 13,000, which is where we really have, right, a very enticing target weighting courtesy of the pendulum swing. The strong spike lower, right? That strong spike lower. That strong spike lower tells me the momentum is clearly bearish here tonight, which means maybe we turn into a spike in channel. Spike in channel patterns are really common, especially in currencies. Spike and channel patterns are really common here, right? So if we do turn into a spike and channel pattern, spike and channel patterns are always very easy patterns. Go back and look at the base of that channel, and that tells you where to be looking for that sell, right? So if we do, again, with a big spike down, that big spike down, anytime we see a spike going with momentum, we oftentimes see that spike turn into a spike in channel. If it turns into a spike in channel, find the base of that channel. You'll notice where these arrows are lining up right now, right? And look for that entry up around the base of that channel. It does require some patience, but again, rule number 1, don't lose money, right? Then we'll worry about rule number 2 or number 3. We don't want to chase after it. We want to wait for that pullback, right, and sell into, right, as the market goes higher. And I'll tell you, we see spike and channel patterns all the time in our trade room, and I have at least dozens of them in that free trading course, which you can learn more about grabbing that information icon in the upper right-hand corner, right, or grab that button below the video tonight on our blog. Now, with this hidden channel being so large, this is a really great clue. Big hidden channel here. You'll notice I'm kind of speculating here. I'm kind of speculating until we put the midline on. Once we see the midline getting all that love, right, that's a good looking channel. That's a good looking wide channel. Now, we talked about wide ranges, right, earlier, if you recall, on, was it oil, right? The importance of understanding the psychology of a wide range, right? This is a wide channel. Now, wide channels are really interesting because one of the things about wide channels, this goes for anything wide, is momentum, right? That momentum is really strong as it goes lower. So the odds of us getting all the way back to the top of that channel, probably not going to happen. Maybe it does. Hope it does. Probably not going to happen, though. Don't hold your breath waiting for the top of that big wide channel. Why? Because momentum, right? Anything wide like this, there's a lot of momentum. Now, what does momentum mean? It means that we should use the midline of that channel, right? I get that question all the time here on YouTube. When do you use a midline? When it's wide. Wide channels, add a midline. Wide range, add a midline. If it's even wider, break it up into thirds, right? If this was another, if this is even wider, put 2 in there, right? Literally break it up into thirds. Okay, and all those levels will be useful as levels of resistance. Okay, it doesn't happen very often, those thirds, but that will be the case. It's even wider than that, right? Wide channel, momentum. Momentum means don't hold your breath going all the way to the top of that channel. Hope it happens, right? Probably not. More realistic is to use this midline, right? That midline is a lot more realistic now as we go, right, as we pull back. So again, we know we have a range. We know we're trying to get down to the low of this range, right? Think about crude right now, right? Crude collapsed down to its range. And then again, if we can get that move lower, right? If we continue here to see it go lower here, think of this as a spike in channel. So keep an eye out for a spike in channel. If we get the spike in channel, right, mark those swings, wait for price to go up, use that 2 try failure, 1 and 2, and sell into those stops. 1 try for the bulls, 2 try for the bulls, sell right into those stops. Easy, easy setup, right? The most important thing is go with momentum and take your time, right? Let those buyers try once. Let them try twice, right? Then once we see them try and they fail, sell into those stops. Now, what if you go sideways here? Could easily happen. You're right in the middle of this range, right? Range is always choppy. What if you go sideways here? If you go sideways here, look for that strong break up, nested 2 try. 1, 2, back down. Let those buyers try once, let them try twice, sell right into those stops. That's another easy pattern if we get a range here, right? 2 try failure pattern. Okay, what if we just punch higher here? We punch higher, wonderful. Keep your eyes out for that 2-legged pullback. 1, 2, underneath and go. Keep your eyes out for that 2 try failure. Strong move up, pull back to the moving average. Buyers try again. That creates a 1, a 2 for the bulls. And again, we're selling right into those stops. Very, very easy patterns. Just need to get this market to pull back off of these lows. And don't forget, tomorrow morning, we'll be in our trade room, 8 o'clock Eastern time. We're going to execute the entire plan together. Will I see you there with me? As always, don't forget to get started as a brand new client, to come and trade with us every morning in our trade room. Grab the advanced class here on the School of Trade homepage. I'll put all the links in the description of this video. If you're not ready yet for membership, grab that free trial. I'll invite you to come out and join me as a guest in our trade room. Free trial also includes that free trading course that we can get the best of both worlds. If you have any questions, don't forget you can always pick up the phone, call that toll-free phone number, right? Shoot me an email, jump on Skype. Use live support. I'm always here hanging out. And as always, it's been really great working with you guys and gals here this evening. I apologize. My voice is still a bit raspy from last week's head cold. I'm still kind of battling some of the symptoms right now, but I got my energy back here this week. So it could be a lot worse, right? Never a dull moment in the markets. Got a great big week ahead of us here this week. I'll see you guys tomorrow morning in the trade room. If not, come back and see me again tomorrow night, same time, same place, on our next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.